Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
As of now, Hang Seng is down almost 1%.
It's not a big negative. I mean, these are not large numbers.
The Nifty IT index is going to play a very, very important role. It could start off near Friday's low.
The negative news flow has really not gone away, whether it's been around the AI trade, the tech trade, whether it's around Iran.
It's a big AI opportunity. There is a massive AI boom. It's not yet translating into numbers.
0.1 to 0.13% down on the Nifty Bank.
There are various reports also suggesting that the action could be as early as this weekend itself.
To retrain those kind of workforces is going to be a much bigger challenge.
And the Nifty Bank has outperformed with a gain of 1.5%.
4,000 crores approximately is the order inflow in the quarter that has gone by, Q4 calendar 25 for them.
And at the same time, we are seeing stocks like Siemens, Power India, CSE, all of these stocks are up more than 2%.
2 years after announcing a strategic review of its Indian business, Swiss Pharma major Novartis AG has exited its listed Indian arm. The mid-caps, which are up around 0.5% for the entire week, absolutely flat. But let's see whether we get going, at least in the next couple of hours of trade.
Well, that was the day so far. Hello and welcome to Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Rima, and we're going to be pulling through the next 60 minutes on Closing Bell. Rima, markets looking pretty good in the green. A good pullback after the kind of selling that we saw yesterday. We pulled back close to around half of yesterday's losses on most indices, with the Nifty Bank powering ahead.
Indeed, the Nifty Bank is up 1.5% for this week, outperforming the Nifty, which is up close to about 0.5%. So that's where the support is coming through. And we pretty much held on to levels of 25,600 on the Nifty. There was a little bit of a wobble around 1 o'clock, but markets, some buying emerged at lower levels, and we're back to levels of 25,600. Let's tell you what's on the tap on Closing Bell. Buying interest across sectors helps offset some weakness in IT stocks. The Nifty edges and is at 25,600. Mid-caps eke out small gains. Small caps lackluster. Metals, PSU banks are the consistent gainers today. Ola Electric scales yet another all-time low. It's a steep 56% correction in the last 1 year. What's ailing sentiment? A comprehensive analysis coming up. And ABB India zooms on the back of record order inflows in Q4. Top line grows across segments, coupled with strong demand from data centers, automotive, infra, rail, and metals segments. Excerpts from our chat with the management coming up on the show. And shares of Novartis India skyrocket following news of the company's Swiss parent looking to exit by selling stake to Chris Capital. A deep dive into the sector to unpack the key trends in this space. We'll focus on Pfizer, GSK, Abbott in just a bit. Kotak Institutional Equities upgrades PB Fintech to add versus reduce earlier. Target price 17.25. Also coming up on the show.
Well, first of all, let's tell you what's going on in the F&O market. The Nifty is holding in the green, and that's courtesy of the Nifty Bank. As we pointed out earlier today, I don't know whether it came in that wrap or not, but I clearly mentioned this morning, till the Nifty Bank holds on to that 20-day MA, you'll fancy a bit of a fight back. And if the Nifty needs to fight back, the Nifty Bank needs to find its form, unlike what we saw yesterday. The Nifty PCR at the start of today was around 0.7. That's bounced back up to around 0.95 or thereabouts. That's because put writers are back in play. 25,500 put, 25,600 put. On both those two, the open interest has surged up and the premiums have come down drastically, telling you there is writing, as the premiums are down by close to around 45%. The key levels to track, well, as I said earlier today, the 25,250, 25,300 mark is very important. That almost tallies in with, the 20-day MA, which comes up for you, or 200-day MA, which comes up for you on the screen. And also you have today's low that came in at around 25,380 or thereabouts. So that's, the important range you don't want to break on the downside. Though at higher levels, so 25,900 will be a bit of a resistance zone. Individual stocks, Tata Steel is seeing fresh buying in today's trading session, but there's only so much a metal stock like Tata Steel can do. What's really encouraging is Reliance Industries. That's an index by itself that's holding one end up, delivery-based buying, fresh long build-up is what we're seeing on Reliance Industries. And that big boy is doing much of the heavy lifting. Canara Bank has come in for a bit of a short squeeze in today's trading session, so keep an eye out on that name. Stock up 3%, open risk lower. And Sammaan Capital, there's a big bit of a short covering bounce that's playing out here. I think either by today or Monday, I think Monday could be the day actually that we could see the stock come out of the F&O BAM. Probably there is a glimmer of hope that it comes out today. Otherwise, on Monday, I'm expecting Sammaan Capital to come out of the F&O BAM. So keep an eye out on that. Net, it's a good trading session. Shots got added in the system. It appears there's a bit of a squeeze. Geopolitical tensions, top of mind. Let's see what comes out of that one. Hopefully, it doesn't escalate. How do you trade, though, in the final hour of trade? Mitesh Thakkar is back with us. Mitesh, we managed to defend the lower levels, 25,380. That's the mark that we defended. Where are we headed from here? And do you think the Nifty has enough to go back to around the 26,000 mark?
Yeah, I think very clearly the Nifty, has managed to hold on to this level of 25,400, which is what I suggested would be the first pivot, and then 25,100 is that gap area. I think these are two important levels. Now, whether we have a reversal, it's still early to say. So, I think, we had moved about 25,800 day before yesterday, and then got back from there. So, 25,800, 25,400 to me are the two immediate triggers. And the market possibly for the time being is more choppy within this range rather than, giving you a directional sense. So on the index, my sense is avoid trading the index unless until, you are looking at the lower end of the range. And two, I think, stock-specific trading may not be a bad idea to look at.
Do you want to give some stock ideas? Any trading recommendations for the last hour?
I have a buy and a sell, I think... a buy on Bajaj Finserv. That's a stock, which has done very well. In fact, in this entire decline, Bajaj Finserv has been either sideways or mildly uptrending. So this is a buy with a stop at 2040 for targets of around 2100. And Bharti Airtel has somehow gone into a corrective mode. Yesterday was a breakdown candle. Today is a fall-through candle in a positive market. So Bharti Airtel will take as a sell-side trade with a stop at 1996 for targets of 1935.
Thank you. We'll come back to you. Bharti Airtel entering into a corrective zone. Let's talk about Ola Electric. It's been in reverse gear for a while now, and it's a 13% decline this week. It's lost about a quarter of its value in 2026. And if you look at the numbers from the all-time high levels, it's heartbreaking. Sudarshan, tell us more.
So as you have said, it's a continued underperformance by Ola Electric shares, and today also this stock is down more than 3%, and this week it's down 13%. 2026 so far, or say in the last 2 months, the stock has fallen more than 26%. What's the reason? So first, recently company has released Q3 FY26 earnings, and those earnings look very weak. Revenue is halved, losses remained elevated, and it's the first time that company has reported loss which was more than the revenue for the quarter. Second, company at the beginning of this fiscal had given the guidance, and that guidance had looked very strong if it had managed to deliver. But we have looked at the data of 9-month FY26. So company had given for auto business EBITDA margin, and the target was more than 5%. As of December 2025, company has delivered minus 6.4%. On the gross margin, target was in the range of 35 to 40%. As of now, it is at 29.6%. On the volumes, the guidance was in the range of 3.25 to 3.75 lakh units. And as of now, company has done just 1.5 lakh units. And on the revenue front, target was in the range of 4,200 to 4,700 crore. And as of now, they have done just rupees 2,000 crore. Second metric is market share data. Now, in January 2025, company had the market share of almost 25%. In January 2026, that has fallen to less than 6%. In January 2026, it was 5.86%. And in February also, so far, registration is looking very weak, and in all probability, its market share is going to fall further. And so far, registration is just 2,806 units versus whole month, if you look at of February 2025, they had done almost 8,675 units. Last one, what do brokerages say? So as per the Bloomberg data, total 8 brokerages have the coverage on the stock, and of those 8, 6 have the sell call, and lowest target price is rupees 20 per share, while the highest target price is rupees 55 per share. So if you take a look at the lowest target price of 20 rupees per share, brokerages believe that there is a further downfall that we can see in the stock price even from the current levels. So we'll have to see how the next few months pan out. But as far as the data is concerned for Ola Electric, it's looking very weak. Market share is falling. Even registration has been under pressure continuously.
Sudarshan, sorry, offhand, do you know the 2 brokerages who are bullish on Ola and who has the target price of 50 plus?
The highest target price is by Goldman Sachs. They have the target price of 55. But 4 brokerages have cut the target price recently after the Q3 FY26 earnings. One of them was Kotak, MK, and some of the other brokerages.
Thank you very much for that comprehensive wrap. That's Ola Electric. It's been a one-way slide for the company. Gurmeet Chadha is now joining in on the show. Gurmeet, thank you very much for joining in. I know Ola is not a stock that you like. In the past, you've spoken about Uno, Minda, etc. being the preferred auto ancillary with a couple of others. M&M as well in the auto pack is a stock that you've liked. But tell us, in the auto and the auto ancillary space, there's a lot which has changed. Stocks have moved around both ways because of the tariff uncertainty, then clarity. What have you all been doing with your auto exposure? Where does it stand at now?
So, we are looking at the complete value chain as what we do. So we are looking at, let's say, in two-wheelers, TVS Motors, iQuick continues to gain market share. All segments, they are doing well. Plus, operating margins are improving. Last 3 years, TVS Motors has been almost if I can call a great turnaround story. Exports doing well. They're doing well in the IC engines. The premium part doing well. Then we have the likes of Uno Minda. Recently, we've added a company called Rajratan Global Wire. They make actually bead wires for tire. They had a Thailand business which got disrupted post-COVID with China dumping. I think that seems to have stabilized. The Indore unit continues to do well. And now we have the Chennai plant, which is where the bulk of the OEMs are. So that is something we've recently added. In addition to this, we obviously have M&M. M&M also has shown weakness, surprisingly, despite very good earnings as well as wholesale numbers. So we are actually looking at increasing some weight there. And if you see the PMI numbers, manufacturing continues to show a good surge. At some point or time, I think it will start getting reflected in the price as well.
And Sandhar Tech, I think in the past you've spoken about Sandhar, Tata Motors also.
Yes. So Sandhar basically has 3 divisions. One is the lock division. Then you have die casting, and then you have industrial cabins. Now, with commercial cycle picking up, even the cabin part is doing well. The castings and the die part is the one which is showing the maximum growth. And TVS is almost 55-60% of the client. Maybe 4 or 5 years back, it was Hero, which was the dominant one. So it's got spread as well. Little soft earnings, so stock has corrected a little bit, but looking pretty good. All 3-4 businesses eventually should do like 1,000 crore revenue over the next 2-3 years.
Okay, all right. Thanks, Gurmeet, for that. But let's get in Vinny. She's here to tell us about ABB India. That's surging in trade, post its Q4 numbers. Vinny in green. Stock well in the green. Tell us more, Vinny.
Yes, Nigel, stock well in the green today, managing to hold on to very strong momentum. Now, do not forget that ABB Global normally gives their order book, and we already had a fair idea that the order book for ABB India will be strong. Now, that's what has come in. 4,000 crores in terms of order inflow for Q4 calendar year 25 for the company. And that is a much better run rate that one has seen over the past few quarters. It was in the 3,000 crore range. Now, this 4,000 crore range has come in. The company has managed to see very good growth across their segments. They've managed to see good EBITDA margins, and especially X of labor code impact, the margins are much better than what one was anticipating or expecting. Data centers has done well for them. Automotives, building, infra, railways, as well as metal segment is the key areas where they've gotten the order inflows from. Now, the stock had already seen a run-up even in the last 1 month before today's trading session. And despite that, we're seeing a run-up coming in the stock. So the street seems to be liking it. Brokerages have maintained their call on the stock as well. There's no change in terms of they call, no change in terms of target price as well. When we spoke to the management, they did highlight certain important points, saying that, you know, currently in terms of the data center order book, that accounts to 14 or 15% of the order book is dedicated to data centers. They expect that industry to grow at a 14% CAGR, and they expect to maintain and aim to maintain the margins at these levels and then start improving. Order pipeline for them remains strong. So listen in to what the management also had to say.
ABB has 18 business divisions, so that means 18 distinct business models. Out of 18, 2 business divisions are distinctly exposed to the data center segment. And if you recall some of the interviews we had with your channel a few years ago, that time the size of the data center market was $1 billion, and that looked like a big number. Today, as we speak, it's already expanded to $10 billion. And I believe in you that when you say it will be $30 billion soon. So I think there is a strong trajectory and a strong CAGR growth in this particular market segment. As far as our books are concerned, we capture for all the market segments, we capture about 15% of our books, order books into data center.
We are at a PAT of 12%, right? So we were earlier, but higher percentages because we enjoyed the benefits of the pent-up demand of COVID in the earlier years. But I think our all actions are to maintain this particular margin as what we are today and definitely improve on it. So it's basically a play of margins, a play of margins on the orders, what we secured, the volumes which we have, which will drive the efficiencies in the business, and of course, the external factors, which will of course have to be managed as risk in any business organization. So long story short, I think our efforts is all about to be sustainable on the margins, and that's how we will try to work on.
Got it. All right, Gurmeet, what do you make of this one? ABB, one of the biggest outperformers today. I'll tell you what, it's had a bit of a rub-off impact. You know, Siemens is up, Hitachi is up. So that clutch of stocks itself are doing well. Your view, they're not cheap, they're not meant to be cheap, and they've never been cheap. Your take.
So Nigel, obviously the order book has helped. I think they're already crossed 10,000 crores as of December. That's like a 12% growth. And I think data center is the flavor. Every market phase has one flavor. And I think some of the order book, other than the base business, is coming from data center, other than the infrastructure, mobility, automotive, etc. But I agree with your valuations. We do not have we have L&T in the portfolio. We have CG Power. So both of them have also shown. L&T made a new high today. CG Power also is doing well. We've also added Hind Rectifier, which is basically to power electronics other than transformers, which is both railway, and now they are diversifying into other sectors. So as far as this space is concerned, which you can call it energy, data center, and data center pick and shovels, which is your metals, your cable and wires, your power equipments, I think that is something that you should do well.
Got it. All right. And the point on Hind Rectifier, it's the railway play, right? And you believe that it's got some tailwinds as well?
So three things. One, it obviously is the main transformer business, which continues to grow at 30-40%. They used to do 100 crore revenue 6-7 years back. They've hit 1,000 crores this year. Now they've got into power electronics. So that is one segment which will do very well. They acquired a company in France, which should do well, which is D-Links. And then they are getting into MEMUs. MEMUs are just like the Mumbai local, Nigel, which is basically the engine is self-propelled, right? You don't need so normal engine is one locomotive and you have like 10, 12 bogies. This is like a self-propelled, which is like even metro or a Vande Bharat. And there's large opportunity there. And once you get through it, you're then eligible for Vande Bharat as well. So that is something also which will do well. And then, of course, it's robotics and power electronics, which is a long-term view. They've done some backward integration in terms of having their own copper unit now, which would add to the margins. So this is one play which is looking good to us.
Got it. Okay. All right. Stay with us, Gurmeet. Let's talk about the pharma space. The likes of Pfizer, GSK, as well as Novartis, all of them are 11 to around 17% away from their 52-week highs. Ekta is standing by with some interesting valuation comparison and a quick look at the balance sheet of these companies as well. Ekta?
Well, yes, the pharma MNCs have really come into focus because of the deal which has been struck between Novartis and Chris Capital, where Novartis will be selling their majority stake in the India arm, which is around 70% stake to Chris Capital for around 1,500 odd crores. Now, interestingly, the pharma MNC space is not that closely tracked by the sell side. But if you just look at a couple of valuations, if you look at how interesting the stocks are, in terms of the 52-week high, there's been a significant correction. So, for example, Pfizer is down around 17 odd percent, GSK 27%, Novartis around 11 odd percent. Abbott seems to be the most resilient at this point in time. In terms of trailing PE, if you compare it to their global listed parent companies, the Indian ones seem to have a premium. So, for example, Pfizer is at 36 times versus the global peer, which is at 19.7 times, GSK 47 times versus the global peer at 16 times, and Novartis similar levels, but Abbott also at a premium in India. Now, one of the reasons for this is because of the strong brand portfolio that they have. Remember that they have a very strong portfolio of drugs which they sell in the country, and that basically makes them possibly have a greater mind space amongst patients. And separately, they do have a strong balance sheet as well. So if you just look at the cash on books that these companies have, Pfizer, for example, has around 27 to 2,800 crores, GSK 2,426 odd crores, Novartis 550 to 600 crores, and even Abbott, which is at around 1,600 crores plus. So strong balance sheet in terms of what they have, and strong portfolio of drugs, which makes it a combination which gives them a premium in India.
Beautiful. Thanks a lot for that, Ekta. Gurmeet, you heard what Ekta has to say. Pharma, any of these names stand out? And what do you all like from the pharma pack? I think Loris was something that you all were holding on to.
So we've been very constructive on the entire CDMO space. Loris obviously has three businesses, which is the generic APIs, the FDF, CDMO, and a little bit of biotechnology. These are lumpy businesses. You've got to be a little patient. You can't really track them quarter on quarter. So that seems to be well. We have DBs in our portfolio. In branded generics, we have Mankind Pharma. And in hospitals and few of our portfolios, we have Narayana Hrudwala. So we play branded generics, we have CDMO, and there's a bit of a hospital play in Nigel. So continue to, if you see Nifty 500, Pharma is about 5-6%. We are roughly about 10-11% in our portfolio.
Okay, got it. Gurmeet. Gurmeet, from the metals pack, I don't think you'll have too much exposure, right? How are you all playing that? Today, metals are doing well. It went through a bit of a correction. Stocks like Hindustan Copper and all, I think, saw 15% correction in a few days after rallying big time. Anything you like from this space?
So, I'm generally a believer that you are in a hard metal structural cycle, Nigel, but from a stock point of view, you got to be more tactical. So we've been a little bit in and out between Tata Steel and Hindalco. But you're right, we haven't done much. And there's one special situation play we have, which is Mukkan Steel, where there's a lot of asset monetization expected with land parcel being sold for data centers in Thane. They've already monetized a couple of land parcels, a couple of more should come. The land bank value itself is a little more than the market cap of the company. But they are into stainless steel, and a lot of exposure is in EU. So that part has been a little sluggish. But now with this FTA and things picking up, hopefully should do better.
Anything else in the data center opportunity? Maybe on the green energy side, maybe on the infrastructure side, anything, power cooling systems?
So as I said, we play the core one, Rima. So we have Bharti, I think, which is one of the larger play, and Reliance through Jio. Then, as I said, we have more the pick and shovels play. We have some, as I said, cable wire names. We have Polycab. We have a lot of companies in power equipment. We'll probably look at some more opportunities in transformers. So we are more in the pick and shovel play as far as data center is concerned. And I think it's one place which will continue to see a lot of traction.
But can you identify 1-2 good names where there's value at current levels?
So as I said, if we have Polycab in the portfolio, we have Hill Rectifier eventually, which should get some play of data center at some point of time. Right now, it's a bit of a more railway play. We're looking at some chemical companies, which is linked to the semiconductor part, because it needs, the wafer needs a lot of treatment through chemicals, both in terms of purification and testing. So that also we are looking at.
Thank you, Gurmeet. Always a pleasure chatting with you, and you enjoy your weekend. It's been a busy week. Thank you very much for joining in. We'll slip into a break. On the other side, Jitendra Arora, Chief Equity and Fund Manager, ICICI Prudential Life Insurance, will join in. Stay tuned.
Welcome back. Well, this is news coming in on ABB because the presentation has just come out and the stock actually has come off from the top. I think it was at the high around 6,250. It's come off drastically. That's because the margin adjusted for Forex as well as labor code, it's actually at around 15.5%. Now, that's lower than the 17% that the street was working with. So that explains why, in fact, you're seeing a bit of a dip out there. And the 1.7% EBITDA margin gain in Q4. That's because of Forex as well as commodity gains. And remember, if you look at it on a year-on-year basis, there's a Forex gain this time around. That compares with a Forex loss. So that's why the stock actually has come off close to 200 points from the highs of the day. Just a few minutes ago, I think we have the presentation that got uploaded on the exchange, which explains why that stock, in fact, has come off. And it slipped a little bit, from around that 2:30 odd mark, 2:30 p.m. is when that presentation came out on the exchanges. So a bit of a cool off from the top is what we're seeing on ABB India. Still up 5%, but come off from around that 7-8% that we saw earlier today. Let's welcome Jitendra Arora, Chief Equity and Fund Manager, ICICI Prudential Life Insurance, who joins us on the show. Hi, Jitendra. Good afternoon. Good to see you in. How are you all feeling about the markets? I think now the biggest skew is going to be what's going to happen on the geopolitical front. We were bracing ourselves for better times, but this is going to be a bit of a roadblock for global equities. How are you all positioned?
No, so what you're saying is absolutely correct in terms of the events which have developed over last week or so on the geopolitical side are clearly concerning for the markets, and that's why we are seeing reactions of this nature, wherein you see markets down 1.5% a day and back 60-70 bips at the next. So we expect this volatility to stay here for some time. And that's what we have taken into account. However, what we have noticed in the past that these events last for a particular period of time and then they tend to go away. So we are trying to do some bottom-up picking in this market wherever we feel that there is good value in the stocks from a 4 to 8 quarters perspective.
Jitendra, at ICICI Pru Life Insurance, how are you all thinking about the IT sell-off, the valuations, and where it's headed? And what are the portfolio calls you all are taking?
So we, as a house, have been underweight IT for last almost 18 months to 24 months now. The call was more basis the slowdowns which we thought we were witnessing in the business per se, and that has panned out over last 6 quarters. To top that, we also thought that the valuations were on the higher side, because if you look at IT company multiples prior to COVID and the post-COVID, there was a marked difference which had come. So on both counts, we thought that it makes a case for underweight IT. In the current correction now, obviously now we are also having a closer look because valuations have now come to a point wherein there is no more excess involved. Obviously, it can still correct further. But clearly, market is much more worried about sustainability of the business model. If you think that we may have an answer, honestly, I don't think we have a answer to that as yet, because things are evolving really fast. And we are also taking it slowly. There is no hurry to act to cut that underweight position as yet. I think we will let it run because we've seen that the markets tend to stretch or overshoot on both positive as well as negative side. We'll, I think, wait for another couple of quarters unless we see clear signs that the long-term fundamentals of the business still stay intact. Then only we are going to react in a more decisive fashion and try and build position into the IT.
So how underweight are you? At an index level, the weightage of IT is 10%.
Sorry?
How underweight are you in your funds on an aggregate basis?
In various portfolios, it will be somewhere between 100 to 300 basis underweight position that we are running.
Would you, look to further bring down your IT holding?
No, at this point in time, we are not looking to bring it down further, to be fair. The bias to act will be on the act of reducing the underweight rather than trying to increase the underweight.
All right, Jitendra, what about a couple of other spaces like the PSU banking stocks? They have outperformed by a margin, if I look at it in comparison to the private banks as well. but still there is some kind of valuation comfort. Now, it's debatable whether you want to compare it with private banks or you want to compare it with the historical averages. Do you think PSU banks still have more to go?
We can see some more rally in the PSU bank space, but that is much more likely to be news-driven rather than anything in terms of fundamental performance within the entire banking space. Because I think in terms of fundamentals, they've clearly caught up where there should be in terms of fair value. Because all said and done, we are still saying that PSU banks will on an average make a ROA around 100 bips compared to anywhere between 150 to 300 bips for private sector banks. So clearly, one model is making a much higher ROA versus the other, where they make up for the lower ROAs through higher leverage. And I think that leverage is now more or less played out, given the fact that on the CD ratio, PSU banks have caught up. On the LCR ratios also now, which were far in excess of 100%. They were almost 145 to 150% last year. They've come down to on an average of around 120 to 125%, which is where a private sector bank also operates. So hereafter, in order to grow their credit, they will also need to raise much more deposits than what they've been able to do in the last 4 to 8 quarters. So I think at least on the operational side, the gap is much lesser now. But the valuations, obviously, they seem optically lower in terms of price to earnings ratio or price to book ratio. But that also has to take into account the kind of ROA these books can generate over a sustained period of time.
So when you talk to your counterparts, the foreign money managers, what is the view that they're taking on India now? Are they willing to commit money?
Clearly, I don't think that is the case yet. And that's clearly seen in the data as well, when you see that there is no sustained buying which is happening in India. And reasons are, I think, well understood there, because everybody is right now trying to get into the trades which are on the positive side of the AI or global AI narrative. So that's why we are seeing that markets like Korea, China remain the beneficiaries of the current FII flows.
Got it. Okay. All right. Jitendra, the other sector that we have been looking at is metals. And metals has been actually glittering. Even on a bad day, you see there is some kind of buying at lower levels. From this pack, what do you like? Precious metals? I mean, then how do you play that? Or is it ferrous or non-ferrous?
So there is no clear way to play precious metals in India apart from...
Gold financiers?
Gold financials, yes. But there, again, the point is we see still more as a leverage business rather than anything to do a direct way to play metals. We would rather play metals for what they are, which is essentially the hard commodities. So from there, our current view is we like ferrous more than non-ferrous at this point in time, especially in the Indian market, given that the non-ferrous space, the names which are listed and which are large, have their own intricacies and quirks, wherein one of the companies is not doing well in US market. The others have seen a lot of rally because of the metal prices itself, per se.
Okay, all right, Jitendra, we appreciate you joining in, giving us all of those details. I'm wishing you a good remainder of the day and have a good weekend ahead as well. Well, by the way, ABB is the stock actually that you should look at. That adjusted margin picture clearly seems to have dampened the stock, because at the day's high it was 6,250. Since the adjusted margins are actually at around 15.5%, which has an element of forex gains as well as some benefit of metal price move. That's why, in fact, on the street is now coming to terms that the margins are actually 15.5% and not 17% that they were hoping for. So it explains why the stock has come off drastically actually from the top, from a 10% gain. Now it's up only around 4.5%. But it's a green day, so let's find out what's going on in D Street chatter. Nimesh joins us to help us out with a check in terms of dealing room. Nimesh, hi.
Hi, Nigel. Volatile but decent recovery from yesterday's sharp sell-off. Even yesterday, while there was a big selling, the Nifty was on almost 400 points. at least the data didn't suggest that there was massive selling from the FIs. That was exactly the feedback as well. The flows were not that bad. In fact, today there is an MOC buy basket at the leading FI desk across most of the Nifty names. So maybe that explains that you've seen a bit of a recovery in the second half, and that can probably extend in the last 30 minutes of trade because of that MOC buy. I guess the sector which continues to seeing selling pressure is IT. Persistence is down another 2%. Remember, I flagged off a few days back that maybe a large acquisition is on the card, and that's the reason why Street is a bit nervous as well in persistence. So that's relatively underperforming. And the overall IT index has been a big loser this week as well. Technically, it's been a 400-point range for the Nifty. 25,450 is acting as a bit resistance, big support, and 25,850 is acting as a bit resistance as well. So clearly that's the Nifty from a technical point of view. But I guess today's pullback rally, especially in the second half, is to some extent backed by a decent amount of MOC buy basket at a leading FI desk.
Stocks, Nimesh, what's caught your attention? You spoke about Persistent and a potential acquisition there, and a large one. Coforge already did that.
Yeah.
And, you're saying now Persistent could be scouting for one, but what else?
So in terms of a couple of stocks, as I said, there is an MOC buy basket. Two stocks that stands out in the PSU names, GAIL as well as NMDC. Both are going to see a very decent size MOC buy at leading FI desk. So maybe the delivery volumes could be quite high in both these names today. So that's the first stock. Second stock is PVR. It's been under pressure of late, but my sense is that large part of the selling from a leading FI seems to be largely getting over. That could be a last block which can potentially clean out that particular seller in the days to come. So that's PVR. And the last is a couple of stocks in a good market where there is delivery-based selling today. ITC and Axis Bank in the large cap name stands out. There is aggressive delivery-based selling is what I understand. So high delivery volume is expected, but on the sell side in both ITC as well as in Axis Bank.
Thank you very much for that. The IT index once again is down 1%. Intraday, it had attempted a recovery, had gone back to the flat line, had erased all the morning losses. But once again, as the day progressed, you've seen the index slip, and now down 1% for the day, 2% down for the week, and 16% lower for this month itself. By the way, Europe is trading in the green. The FTSE is up about 0.5%. The CAC is a gain of nearly 1%. The DAX is holding up in the green. So Europe is fairly resilient right now, similar to the gains that we're seeing in India. Get into a break. On the other side, we'll get you a few BTST calls from our experts. Stay tuned.
Some kind of profit taking is what you're seeing actually from the top on the Nifty. Adani Enterprises has suddenly seen a sharp downtick. I think we should get that one up for you on the screen. Pull up Adani Enterprises. HCL Tech as well has dipped into the red. Now it's down close to 1%. Quite a sharp drop on Adani Enterprises. Adani Ports as well has slipped actually. So the Adani Group has come in for some profit taking. Adani Ports, Adani Enterprises, both of them have moved down, and they moved down in the last few minutes as well. Bharti Airtel is the other one that's seen a little bit of a slippy slide. Let's get Mitesh Thakkar back with us on the show. Mitesh, on the Nifty Bank first, tell us what are the levels you're looking at out there, because if the Nifty needs to move up, then needs to bank on the Nifty Bank. So if you could help us out with that and fresh 2 picks.
I think very well said. In fact, it is the bank Nifty, it's not fallen. That's how the Nifty is still sustaining above, let's say 25,000 on the low of 24,825, which we made on the budget day closing low. So I think it's the bank Nifty to showing strength, and the levels on the upside are 61,500, which was tested yesterday morning, and then 61,950, 62,000. The texture of the banking names as well as financials, I think, remains strong, and that is what is keeping the Nifty on hold. And if the Nifty bank starts to go, then I think I'll consider a test of at least 25,100 on the Nifty index itself.
Any BTST calls for the weekend?
Yeah. Canara Bank, I mean, you were just talking about the banking names. Canara Bank is at the day's high. That's looking good, and would suggest a target of around 158, and the BTST with a stop at about maybe 152.5, 152.4 is what I would expect. And a negative or a sell side call on Dalmia Bharat Cements. STBT here with a stop at about 2087, which is just about the day's high, and a target of around 2030, 2025.
Thank you very much for that. In case we don't speak again, enjoy your weekend and look forward to our Monday chat. Thank you once again, Mitesh, for joining in. Let's talk about PB Fintech that's surging in trade because Kotak Institutional Equities has upgraded the stock. Now, Sudarshan is here to tell us why.
So in the recent past, the stock has been underperforming the market. And the reason is the concerns because IRDAI, that is the insurance regulator, will be coming out with the draft paper on commissions very soon. So in the last few months, if you would have seen all the regulatory firms, whether it's RBI or say Economic Advisory Council, everyone has been talking about the increased insurance commissions, and that's basically impacting the insurance penetration. And this is the reason why it has been asked to insurance regulator to have a discussion with all the insurance companies and come out with the draft norms, and that draft paper is expected very soon. And because of this, the stock was underperforming in the last 2 to 3 months. So Kotak Institutional Equities has today come out with a note that after the recent underperformance, risk reward has turned favorable. And what would be the reason that what would exactly help the stock? That's the premium growth. Basically, term plan and health insurance plan. These two form almost 50% of its total business. In Q3 FY25, premium growth was 45%. Will it sustain? Well, going forward, Kotak Institutional Equities believe that growth is expected to be around 40% as far as premium is concerned in FY27, and in FY28 it's going to be around 33%, but it will be more than company's medium-term target of 30%. So concerns will be the insurance regulator's norm on commissions, but that can be offset by the premium growth that the industry is going to see over the next few years.
Thank you very much for that. That's PB Fintech for you. And another stock which is moving up to a brokerage reaction is Lenskart, where Motilal Oswal has put a target price of 600 rupees. They believe the company has very strong moats. But the big story for the last 48 hours has been the surge in crude prices to $78 as tensions bubble in the Middle East. Will there or will there not be a conflict between US and Iran? Manisha is now joining in with the latest.
Well, thank you so much for that. Holding around those 6-month highs for the crude oil prices with 5% gains in this week, and it is up by nearly 15% for this current year. Well, as you said, there are various statements sloshing around when it comes to US and Iran. US especially now, the president saying that he's giving a 10 to 12 days, or rather 10 to 15 days of a deadline for a nuclear deal call with Iran therein. The US also in the meanwhile seems to be deploying largest military force since 2003. That was when the Iraq invasion happened. So this really seems to be building up in some sense. Most people that I have been talking to also says that the reason these 10 to 12 days have been given so that the US can ensure that there is no impact on Hormuz, or that is not part of the strike or the deal therein. We also have a report suggesting that there has been military drills that have been done with Russia and Iran in the Oman Sea and the northern Indian Ocean as well. So all of these seems to be adding some geopolitical premium in case of prices. The conversation that we've seen on Ukraine and Russia agreement as well is something that's adding premium to prices. You also have decline in US inventories by 9 million barrels in the previous week itself. So there are various factors that seem to be supporting crude oil prices right now. But what the street really seems to be working is with 3 war scenarios at this point in time. The street believes that if the US and Iran come back to table and there is conversation that is resumed yet again, you could be looking at crude prices coming back to $68, $65 per barrel. If there is no conversation but no military fight as well, then you could be looking at crude prices inching up to nearly $78, $80 a barrel. But if there is a military strike and then Strait of Hormuz is gotten in and you have Russia coming in and Israel and US are already talking, in that case, if too many countries get involved, then $100 can be a possibility as well, though most believe that this perhaps is going to be averted.
All right, thanks a lot for that, Manisha. Well, let's welcome our market expert, Anand Tandon, who joins us on the show. Hi, Anand. Good afternoon. Good to see you. Anand, I wanted to ask you about ABP. Did you have a look at those numbers? From the morning, the street was celebrating those numbers, but the presentation came out at around 2:30 p.m. And from there, the stock has slipped. I think it's slipped close to 5% from the highs of the day. Any view on this name today? Of ABB India that's doing well. Siemens as well has moved up. Hitachi, people talk about it being expensive at 10,000, 15,000, 20,000. It's almost at 25,000 rupees today. Your view on any of these names?
So I have not seen this particular company's results, but in general, I think capital goods is certainly an area worth looking at. Finally, the capex for private sector has moved up, but unfortunately, the market reacts very quickly. So if you see, there's a whole range of companies which are in the manufacturing space, which are actually doing very well, whether it is related to power or even in terms of other companies which are perhaps, in the API space like KRN and so on. In the PLI space where they are looking at exporting capital goods. So it's certainly an area which is of interest. I have not looked at this particular presentation just yet.
Any contra view coming through on IT now?
Not really. I mean, it depends on what you mean by contra. If the idea is that can you trade it on the upside a little bit, perhaps, should you be investing a significant portion of your portfolio in it? Not really. You have to remember when managements are in strong denial that nothing will change, it usually means that they are panicking. And that is what I hear them say.
So you're sensing panic in the management, the commentary that we heard from the IT companies.
They seem to be telling themselves that things are not as bad as it looks. That doesn't sound like a very confident, inspiring speech. And the reality is that, basic coding is something that is commoditized. We have to look at, and my own assumption is that we will be looking at much higher quality companies, which are much smaller, made up of people who are at the cutting edge of technology, and then a whole bunch of people who can just use the AI for applications. I don't see the companies that exist today as monoliths with 40, 50,000 people as surviving in this form and shape for too long.
Okay, all right, Anant, thanks a lot for that. Just hold on to that thought. By the way, from the broader markets, a few stocks are doing a thing of their own. Hyundai has moved to the high point of the day, so keep an eye out on that one. Suddenly, a big spurt is what you're seeing on that particular. I don't know whether it's something to do with the MOC or some kind of rebalancing, but a big up move is what you're seeing out there. On the flip side, Godfrey Phillips that has rallied very, very hard all through the week. That's come in for profit taking yet again. So that's moved to the low point of the day. It was more or less flattish. And now we're seeing a bit of a downtake. We'll slip into a short break, come back. We'll talk more about the markets and we'll wind down the week for you as well.
Welcome back. PSU banks continue to see buying, 1.5% up for the day. For the week, 5.5% surge. And this month, the index, PSU banking index, has gained close to about 7.5%. Strength visible in a PNB, Union Bank, even Canara Bank is up nearly 3%. So that's a pocket which deserves mention. And Newgen Software, the up move or the volatility and the share price move cuts both ways. Yesterday it was up 10%. Today it's fallen 10% and it's fallen on very large volumes. MRPL too is correcting. It was one of the big movers yesterday. Today it's seeing some profit taking despite the rise that we've seen in crude prices. Anand, I remember from some of our old conversations, you used to look at textiles very closely. And then in the last 12 months, they got whipsawed, mostly on the way down because of the lack of the trade deal, the 50% tariff, etc. Now, some clarity is eased and the situation should improve. What is your expectation? Any stock that you'd like to recommend in textiles?
The same old kind of companies. At the end of the day, we are not so much a garment seller as we are perhaps a yarn seller to some extent. And of course, the garments that are being sold, they don't add too much value in terms of the amount of money that they actually make on it, but it's still a very large portion of the export. So to the extent that we have a trade deal which is not unfavorable to us currently, or so it seems, certainly it would be an area that would be of interest simply because of the fact it employs a large number of people. And therefore, you want to be able to export to the most expensive market in the world. That said, we are going to continue to face competition from our neighbors. So Bangladesh has been a problem in terms of exports. It's not like we have got quota removals. And therefore, that competition remains. More importantly, we will see a lot of textiles, etc., shifting to even lower cost countries like Africa and so on. So broadly, this is not a sunrise industry. It is something that will continue to potter around and will need significant support from the government, which it has been getting in the form of interest subventions and so on, which will allow it to actually make some ROI. Otherwise, the ROI is fairly low.
Anand, any view on Hyundai? We were just highlighting the stock before we went into the break. I recall when they came out to the IPO, there was plenty of questions. Cash being returned back to the promoter, valuations not very conducive. And the stock actually had a very flattish to a negative listing. But after that, it saw a big rally and then it's cooled off a little bit from the top. The last few minutes, it's moved very, very quickly. I think more than 200 rupees, from the lows to the highs. And now it's cooled off a little bit. 2,300 rupees. Are you interested?
So, this has become a four-player market as far as the passenger vehicle business is concerned. And we are already seeing that even within that, the lower end of the market, there is not that much demand. So it's mostly the SUVs. Hyundai and Kia, if you were to look at them combined, have a decent portfolio, but they are not the outstanding players in that area. So from that perspective, if you are looking to play this segment, then you are probably better off staying with the market leader like a Mahindra. But that said, if you want to be in auto, I think the safer bet currently is actually the auto ancillaries, because with the auto sector in India showing signs of revival and the export market again beginning to open up, that would be an area where you'll be playing a more stable kind of demand scenario rather than just looking at the domestic cycle. It is a very high intensity, capital intensive kind of business, and with very few winners. So, it's not something that you can take a long-term bet on.
This entire data center opportunity, there is a race to build data centers in India. TCS signed its first anchor client in the form of OpenAI. Reliance Jio said that their 120 megawatts will come up on stream just in the second half of this year. And then there are other players in this system as well. Many big tech companies, there is a tax holiday. So clearly it's going to be this AI infrastructure could be a big theme going forward. Will it be a decadal theme? Is there any actionable trades, investment ideas on the back of that?
So, it's a very interesting thing that today we now have companies claiming that India's power is cheaper than in other places. For the longest time, we've had the exact reverse argument that power is more expensive in India. So if you look at what goes into the data center, land is not cheap in India. All the equipment is going to be mostly imported. We don't have either the CPUs, GPUs, memory, or any of the actual electronics that goes in. So it's land and power are the two major inputs that you will get from India. Everything else is imported. Manpower, which we are good at, is hardly used. So it is bound to be a segment which will thrive only because the government will demand that a lot of the data be centered in India. It's a regulatory driven demand, not something that is likely to give you extremely high ROI, especially since we don't own any of the technology. Now, coming to where you should therefore try and find ways to play it, I think you are better off buying companies like, Navin Fluorine. I mean, I'm not making that as a recommendation, but I'm saying those are the kind of areas that you want to look at where cooling, for example, if you've got liquid cooling as a potential market, because that is going to be one of the big areas. You might want to buy companies which can do things like that than worry about those which are simply, putting up land. I mean, it's quite hilarious to see that real estate companies are now masquerading as technology companies in the nature of data centers, given that their only capability is to be able to bribe the local government and get land and power connections.
Very quickly, yesterday, Anand Mukesh Ambani said that he will be able to bring down the cost of intelligence dramatically to make sure India is competitive. But now, given, as you said, the cost of power is high, the cost of real estate is high, especially if you're looking at it in tier 1, tier 2 cities. And right now, at least all the data centers are coming up in tier 2 cities. Then is that possible? Very quickly, because we've got closing to do.
Well, I mean, Jio has the ability to do it. I don't think too many others can.
Okay. Thank you, Anand, for joining in. Just counting down to today's trading session. It's a good one. We're closing with a gain of about 0.5% on the Nifty, just shy of the 25,600 mark. So came off a tad bit from the high point of the day. The problem is the IT index. The Nifty IT index today ends with a gain of about 1%. For the week, it's lost about 2%. And it's been down now, the Nifty IT index, for the third consecutive week. In the last 3 weeks, that's basically in the month of February, the index is down nearly 17%. So IT was the problem. But other than that, You had, strength coming through in PSU banking index. That continues to be the star performer. In fact, the Nifty banking index, led by PSUs, did well. Metal saw buying. The Nifty metal index up nearly 1%. Run you through some of the big movers. Hindalco, NTPC, L&T saw buying. HUL, SBI Life, Coal India, Power Grid, Tata Steel, Nestle, and on the way down, Eternal under pressure. This week, Eternal has lost 6%. It's stealthily, come up as one of the worst performers this week. Infosys, Tech Mahindra, HCL Tech. So no surprises. IT is down in that list on the way down. Mid-cap index ends with a gain of about 200 odd points. Thursday was a rough session. We managed to, rebound a tad bit today with a gain of about 0.4%. Well, we'll take your leave on this show. Thank you very much for joining in. But don't go anywhere, because on the other side is Editors Roundtable, and we're going to go full tilt on the tech sell-off and where the IT industry is headed from here on.